Good morning, everybody. How are you doing? 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 All right, I think we kind of got that under control. Let's go. Let me know if you can hear me loud and clear in the comment section. If not, we will fix whatever needs to be fixed. Awesome. All right, let's get to it, shall we? Let's get to it. Let's put some charts on the screen. That's what we came for. Music's nice, but let's put some charts on the screen. Awesome. Good to see everybody again. It's been a while. I've actually been off for very nearly 2 weeks. 1 second, what's going on here? Okay. All right, so I said I've been off for almost 2 weeks. This will be my first. Well, actually, that's not true. I analyzed the trade signal that SD gave while I was away. I thought it looked like something that needed a bit of clarity for some of you, based on the feedback I've gotten so far or in the past. But other than that, this would pretty much be my first live action trade or my first analysis session in 2 weeks. So let's see what's cooking. Tuesday's the day I really like to get into the markets because, just give me a second, guys. To move something, something's feeding back, and I don't quite know. Okay, I do know what or why it's feeding back. Okay, so I think we're good. All right, so let's get to it, shall we? So we're doing three things today. And SD, if you're around, if you want to, at some point, if you want to pop in on StreamYard, just let me know by WhatsApp. I'll send you the link. You can also give your thoughts on what I want to show. But I'm basically just going to be building upon a methodology that I've been teaching you guys for a while. One of the reasons why some people struggle with trading is, rather than doing a couple of things very well, you want to do everything. And nobody does everything well. I don't care who you are. I don't care what you do. I don't know of a single walk in life where you can be a jack of every single trade and a master of every single one. So where you can be a jack of all trades and a master of all. And so you got to learn a consistent, applicable way to approach the markets and be happy with whatever that gives you. And if at all you do want to change your approach, it should be intentional. It should be with some forethought. And it should be, okay, I'm changing my approach, I'm changing my strategy, I'm changing my system, and it's changed. You can't go into the market every single day with a different approach and be successful. You absolutely just cannot hope to go into the markets every single day. I'm going to do this, I'm going to do that. And in the days of YouTube and social media and influencers and people renting private jets that are tied to the hangar and therefore can't fly, some of them haven't worked in years, and hiring cars out for the day. I know because I used to hire cars out, and I know several people who came to hire my cars so they could do a flex for some promotion. Many of them forex bros. In those days, you keep, oh, this guy's doing well, I'm going to follow him, and then you get next guy, and then you get confused. So one of the things I hope you're learning from this is a consistent way to approach the markets, day in, day out. Take your wins, take your losses, risk manage, money manage, and you'll make money. You've seen on the group with the signals, I think we're doing roughly about 70% on the signals we've done in the last month on that group. And we're doing minimum 4 3 2 1s. Now, 70% success rate at 3, 4 to 1 is huge. And we have runners that are going 10, 11, 12. So, all right, cool. So this is what we're going to, every time I do a live session with you, I'm going to add a little bit more to the system. I don't want to give it to you in one go because I don't want to overburden you. But every time I give you something new, add it to what you already have learned. And what I gave you on day one is enough to be profitable for life. These are just ways to fine tune. All right, cool. So let's start with NASDAQ. So again, just going to get rid of everything you see on my chart. No, object tree is what I'm looking for. Snap. Okay. What have I done? I think I've broken TradingView. Okay, let's okay, good, we're back. So I want an object tree. Excellent. I want to take out every single thing here. Cool. So blank chart. This is what you come to every morning, every day, and certainly at the start of every week. I should have done this on Saturday. I'm doing this on Tuesday. I've been off the markets. So let's go blind and see what we find. That rhymes. So bear in mind, I'm a 4-hour trader, right? That's me. Now, it doesn't mean I make my entries on the 4-hour chart. It means I let the 4-hour chart dictate what I'm doing. All right? You've got to ask yourself, what type of trader am I? The question is very simple. On what chart am I going to be finding my signals? And a signal, as in analysis, not in giving you trade opportunities, a signal where analysis is concerned doesn't mean you get into a trade right there and then. It means the market tells you there is something to look for, or we've found something, get ready to enter a trade. So my signal chart is the 4-hour chart. In essence, I'm going to let the 4-hour chart tell me when it's time to start looking for a trade. It means I only need to check the market every 4 hours. Now, I would not advise you to go anything less than a 1 hour or 15-minute chart as your signal time frame. It's just not worth it. Now, since I'm 4 hours as my signal time frame, I'm going to start my analysis from the weekly. If your signal time frame is a 1 hour, you're going to start your analysis from a daily. And if it's a 15-minute, meaning you're a scalper, if you're taking signals on a 15-minute chart, you're going to be executing them on a 1-minute chart. So you are a mega scalper, then you're going to take your levels, or you can start your analysis from a 4-hour time frame. I'm 4 hours. Let's apply it all the way down the line. The same principle. Time is fractal. Applied same way down the lines. Okay, cool. So, having said that, we're going to go to 4-hour chart, and we're going to start mapping key levels. That's it, just key levels. And when it looks like, we're being Nostradamus during the week, this is one of the ways it works. So, weekly time frame. All right, now I'm going to get rid of this annoying bars on my screen. Okay, cool. So, this is the weekly. Now, we're not looking for direction on the weekly. Stay with me now. Because if you're looking for direction on the weekly could be pointed in one direction and the next 3 days will go the other way. So we're not looking for direction. We're looking for levels. That's it. And if you look at this asset class, we are in uncharted territory. We have never been here before. This means dinosaur, means this is the beginning of time for this asset class. We've never been here before. So there is nothing above us, potentially, to help us. Now, it's a little bit scary, but this is where your nuance as a trader comes in. So, what has price done here? Well, I'm not going to put it, okay, fine. So it's swept that low, it's reversed to the upside, it's taking out that high. And because we are anything over a day and over, that's going to be in black. So when we look at this on the lower time frame, we know this is coming from daily, weekly, monthly, above. Right, so there was a nice consolidation level. Price has taken out the low of the consolidation and the high of the consolidation. What's it done? It's contracted, it's manipulated, and expanded. It could still go either way. Price could come shooting down. It could just take off from here up. We don't care, because on the weekly chart, we're not trying to find an entry. So what are the levels to be cautious of? Well, this is the last high we've taken out here. So we're not looking at weekly highs and lows. That's the high of two previous weeks. Now bear this in mind. Assuming this is not going to create a fair value gap, you would expect price to come in and have a stab here, wouldn't you? That'd be fair. Secondly, there is a fair value gap hiding in here. I'm not going to draw it, but from the top of this candle to the bottom of this one, that's a huge fair value gap there. Thirdly, there is no liquidity up here. Just think about that. There's nothing up here liquidity-wise to grab. There's nobody stop losses. There's no fair value gaps in there. In essence, I think price is due some sort on a weekly level of a retracement to pick up some liquidity. That's just my thought. I think before we go up any further, we're coming back down at least to somewhere just above this level, maybe even pushing back down to here, or maybe even closing the fair value gap. That's it. We're already near the high and close of the past week. So we're already in that space. It's no longer a key level because we're there already. In essence, we are currently at a key level. The low and open down here are beneath this level. So that's all we can get from a weekly chart, simply because we're in an area where price has never been before. So now we drop down to a daily. Okay, now these are the same levels from the weekly. You can see clearly there was a contraction, manipulation, and expansion. Now, on a daily chart, again, there's nothing above us, but what do we have beneath us? We have the low of yesterday. Who thinks that would be a good level to hunt some liquidity? Remember, price pushes from, in essence, orders. Where are people going to be putting their stop losses and their take profits? That's what drives price. So there's definitely going to be some liquidity resting beneath that. There's a fair value gap in there. So I'm going to draw that one, because from the daily, a weekly fair value gap has no meaning to us in terms of it's too huge. But a daily, we can draw it. Where am I? There we go. So that's a fair value gap. So we see what we call a confluence of liquidity. We've got two levels of liquidity here. One is the low of this day, and just beneath it is a fair value gap. Hands up who thinks it might be a good idea, if you're a market maker looking for some liquidity, to push up to at least tap into that. And if you're looking to push down, right, then what you would then see is what we call an inverse fair value gap, where you blow through a fair value gap and then you come back into it and then you take off further down. So one way or the other. Now, we don't have to be right. We're not trying to be right. We're just trying to prepare for if we're right. One way or the other, I think we're good to see price drop at least further. And I think at the start of today, if you were in the markets when the day began, or even when the week began yesterday, I think it was fair game to expect price to come back into the zone. Now you're thinking, oh, that's just a little bitty bit. Well, if you're on a 4-hour chart, that zone, of course, and there's more. There's also liquidity here. This is another low, a swing low on a daily chart. There's going to be a lot of liquidity there. And simply just the low of this day, the low of Friday, is also going to hold on the lower time frame some liquidity there. One way or the other, I think at least for the next day or two, we should look at a short. If we go now I am on my signal time frame. In essence, now that I've mapped out some key levels I'm interested in, and notice how those levels, what have I done? Okay. Right. What have I done? Okay, let's just reset this. I'm still figuring out TradingView, everybody. Forgive me. Oh, exactly, good. So these levels that look so close to each other, can you see how far apart they are on a 4-hour chart? This is 4 hours. Now we see what's really going on here, right? Now this is a signal time frame. Price took out that low, like I taught you, and reversed on the 4-hour chart. That's critical. A 4-hour turtle sweep or liquidity sweep takes out a lower high and then has an engulfing or reversal candlestick pattern the other way. So this is where this move began, down here. Pushed up, came back, and then pushed up again. If we draw a Fibonacci from there to there, it'd be fair to expect it to get to at least the 0.5, and the 618 would be very nice. Well, what would you know? The 0.5 is just beneath this fair value gap. The 618 is beneath that daily low we spoke about, and inside a 4-hour order block here. So we're building a pattern that we're expecting a reversal. That's all we're doing. We're building some evidence in our mind. Well, not evidence. It's not evidence, but some argument, some justification for a short. Now, if we were going to have a short, remember our signal. This is one of 3 I trade, but I taught you this one so far. We want to see, I just showed it to you the other way, a 4-hour stop hunt and reversal. And now this is going to be purple because this is a 4-hour chart. It's our signal chart. So I use purple for my signal chart because I call it the royal chart. Everything above it in black, everything beneath it in blue. Right. We've had this high taken and a reversal. Now, I would ideally like to see this lows cleared to tell me this reversal is fully legit. But assuming we're taking off on this premise, we are now hunting a short. Now, let's assume we can get the short just roughly somewhere in this range, right? Roughly somewhere where we are. Let's assume we just threw in the short right now and took it to this level there, right? And we put our stop loss at the high of that stop hunt. That by itself would be over 221. Now, I'm trying to keep it simple. There's several other things I could throw on here, but you're just teaching you how to frame a trade idea and then wait for the market to confirm what you think it's going to do. If it confirms it, you trade. If it doesn't, you stay out. Now, how could we refine this even further? This is where you go down. And you can go down 2 time frames, or 1 time frame at a time. I just like to jump straight. So I'll do 4 hour is my signal. I'll do weekly and daily to get my levels. I'm going to go straight to a 15-minute chart. I'm going to just bypass the 1 hour chart. It has some use, but to keep it simple, it's going to bypass it straight away. This is now going to be my execution time frame. Right? So it's all set up here. That was the high that was swept on the 4 hour chart. This was the sweep. Now, remember I said I want to see a 4 hour engulfing pattern. You could argue that this was the engulfing pattern. Actually, this candle itself was a reversal pattern. Look at that. that itself is a sharp rejection. You can have one candle patterns that tell you a reversal story. That itself. So if we took it on this one, I'm just going to throw up a line here to let us know. Okay, so I'm just going to throw that there. Nope, not that way. Okay, so I'm going to throw that there. Excellent. Let's go to 50-minute chart. So this was the 4-hour candle, meaning from this line, the next 4 hours. So 1, 2, 3, 4, 1 hour, 1, 2, 3, 4, 2 hours, 1, 2, 3, 4, 3 hours, and then 1, 2, 3. So basically here, this here now becomes the smoking gun. Why? It's at the 4-hour level. It's a 4-hour reversal, and we have a broken structure or change in character to the downside. This is a swing low. Now that's going to be in blue to show me it's beneath my signal. From this point onwards, we are hunting, or would have been hunting, a short. Again, just assuming we're sticking to this analysis rules. I'm not adding any of the, if I'm not even adding some of the stuff I've taught you, because I just want to show those who are new how we build a trade idea. Once price goes below there, you could literally have taken the trade once it's stabbed below there. You could wait for it to come back up, right? But once it goes below there, you are in. Now, imagine you got into this trade just the moment it stabbed below that, right? Where do you put your stop loss? You could put it above the high there, or if you're trying to be safe, put it, this is the safest place to put it, but sometimes I'll put mine there, depending on what I see in the live market conditions. And if you target just the next low, meaning this one here, that again is a 2.421. That's using the 4-hour chart. Now, if you brought it down to that low, that high, then that is a 421. And therefore, if you were in the market at, say, 145, so that's 245. So if you were trading Asia, and why I love futures, I grew up trading EU and GU. The problem with EU and GU is, well, actually it's not a problem, it's actually a good thing, is that you can just ignore Asia 8 days out of 10. It used to be, it's different now. But back when we came up trading, you could basically just go to sleep at night, wake up in the morning, very little would happen overnight. If you're the kind of person who can only trade Asia, meaning if you're in the UK or West Africa, you can only trade, you got to go to bed to go to work. And so by the time Asia opens, it's about 10 a.m., 9 a.m. here. By the time it really gets going about midnight, you can't trade this. But if you're somewhere in the world where your only window to trade is the Asian market, you really want to be looking at futures or futures and commodities, because they get traded at all times. And so if you were up in the market at 2:45 a.m. and you took this, the moment it stabbed beneath that low, you put your stop loss there, you are already up 3-1. As of right now, you would have been able to cash out for 3-1 an hour ago. And if you decided, so you should have moved your stop loss to 0, you should have taken some partial profits. And if you wanted to hold till that low, you would get almost 4-1. Now, this is the beauty of multi-time frame analysis, because you can now convert this trade to a 4-hour trade. Because remember, the signal was a 4-hour signal. Aha! Can you see now? Based on a 4-hour chart, we said there is a very good opportunity that this at least dips into this fair value gap and potentially comes down as far as here or here. We don't know that it will. But let's assume it gets to the middle of the fair value gap. Although now that you look at it, actually, on a 50-minute chart, it wasn't a fair, this candle. So yeah, it looked like a 4-hour chart, looked like a fair value gap on a daily and a weekly. But on a 4-hour chart, we can see that that gap actually does not exist. But still, if we come down, say, to this level here, into this order block there, right, to the top of the order block, that is potentially an 8-to-1. If by some stroke of good fortune it were to come all the way back down to close this gap, because if you can see, there is a 4-hour gap here. Now, not a fair value gap, a momentum gap. Price took off from here to here and has never filled that liquidity void. So if we brought this just down to fill it, that is a potential 12-to-1. And so when you see us putting stuff in the group about leave the runners on and the runner made 10-to-1, 12-to-1, I've seen runners do 15-to-1. I'm not joking, I'm serious. I've seen, you're thinking to yourself, I should have left the whole position on. Well, if you left the whole position on and then it turned around and you lost it, you'll be crying. But it's just good to see that your final take, psychologically, being in the trade risk-free with maybe 10% of the position left, and seeing it clear a risk to reward of 10-to-1 is a beautiful feeling, and it does wonders for your trading psychology. So back to a 50-minute chart, this would be the trade, and this will be potential the signal we give you. This is how the sausage is made. So we would have said entry here, but like I told you on the group, you don't just enter because you get the signal. When we send you a signal, we're saying get ready to potentially enter. When we say get in now, we're saying, okay, we've seen the conditions we want. So we could have said stop loss between, we would have said between 27353 and 27378. So we're basically telling you pick the more risky one or the more conservative one. Riskier means more reward. Conservative means less reward, but safer. So when you see stop loss range, this is how we do it, right? You can also do it using volume profile analysis, but we'll get there in a few weeks. Then when we then say take profit one, right, would be a minimum of 1-to-1 to the next. So this low here is roughly 1-to-1. We will never send you a signal where your first take profit doesn't at least give you the same risk you put in. Doesn't make sense. Take profit 1. Take profit 2. Maybe this low there. Roughly at least 1.5-to-1. Take profit 3. About 2-to-1. Could have put that one there, but this just makes more sense, right? So this is 3-to-1. Take profit 3. Take profit 4 would be somewhere inside this fair value gap. If we put a TP5, say this low down here, right? And then after this, everything else will be a runner. And this is how you can make 8-to-1. Well, if you take off the profits at the different ranges, I personally will not take profit at anything less than 2-to-1. Does not make sense to me. So sometimes you see that when SD puts a signal in, I will say I'm still in on the full position. We're all different traders and successful ones, but you would do what works best for you. Your brain sees the markets and life a certain way. Don't fight it, just go with the flow. All right, cool. So that's basically what I am looking for in NASDAQ futures. Problem is the entry was while I was asleep. But it's still good to leave it there. I'm going to leave that there, right? And see what it does. Does it confirm my analysis? The beauty about watching a trade you're not in is you have a risk-free, emotionless, unless you have FOMO, but largely emotionless access to high-level market tuition. and confirmation about whether or not your analysis or your system works. Okay, enough talk. Let's go to gold. I'm going to do this a bit quicker because I've talked you through the process, so I can do this a lot quicker. Where's gold? Okay. Okay, so XAUD. There's IC markets. There we go. All right, so for about 2 weeks, gold and NASDAQ were kind of moving together, but they seem to have broken their, what's the word now? Seems to have broken their correlation. So where are we? Object tree, get everything off. All right, first chart. So again, 4 hours my signal. So I'm going to weekly to establish and daily to establish some levels. All right, so now unlike NASDAQ, we are in an area where price has been before, which is good. That helps us, right? Analysis is a lot easier when you are in charted territory. Let's slide this down a bit, get a bit closer to my screen. Analysis is a lot easier when you're in charted territory. So here we are, weekly. So now, for the sake of time, I'm going to go straight to a daily to get my levels, because every single daily level will exist every single weekly level will also exist on a daily chart. Is that all right? Okay. So I know what I'm looking for. Actually, you know what? Let me just do it the long way so that you guys see. So basically, we're here. We're going to go up. So we're working within this range right now. Between this high here and this low down there, right? From here, we have 3 weeks up, 4 weeks down. It's not likely that price breaks this range in the next 1 or 2 days. It's possible, not likely. So I'm going to stick to that range now that we are in the middle of and when I say range, I don't mean consolidation. I mean range of candles. We're going to stick in there to do our levels because it's unlikely price gets out of there quickly. So very simple. We're going to get the high of the range. That's a level. Get this. The mouse is hurting with that ring. Let's put that in black for reasons I've already explained. That's the low of the range. And then the level just beneath us on the weekly chart that we're interested in is that week's low. That's the next one we're interested in, right? It also coincides very nicely with this week's high, so we're not going to bother drawing both of them, roughly the same level. After that, the next level we're interested in is this week's open, which also draws in very nicely with this week's open and close. After that, this week's low, and then from there on, it's look out below. On the other side, that there, that's a weekly close, very close to another week's open. So we'll just take the open of the week. All right, and then there is there. I hope you can see what I'm doing. I don't want to have to talk all the time. There, we've already basically taking this out, but price could come back and use it as support, resistance. So even though we've passed this here, we could go back up, touch it, and come back down. It's too close to this on my chart. I'm not going to actually, well, okay, we'll just do the far part enough to draw. Right, cool. So that's it. If you go down to a daily chart, you'll see that those lines line up with daily quote-unquote pivot points. So every single line there is a day. Now, usually I would add a few more on the daily. That's a daily high, so it's several. But no, I'm just not going to do that for the sake of time. Right? Cool. Now, let's adjust that now that we see where. Okay. So now, on a daily chart, what's our direction? Well, let me add something that I trade personally to the system I've been showing you that I haven't divulged yet. The same way a 4-hour liquidity hunt and reversal the other way tells you for your signal, for your directional bias for my time frame level, I want to see price take out the low of a day and the high of the same day over at most 48 hours. This candle here is a perfect example. In one day, we took out the high of this day and the low of that day. We're short. Of course, we expect price to come back up to find support, a resistance, and then go. But this candle here tells me we're short. Now, it's a directional bias for me. If I was a swing trader, it would be my signal. Same thing happens here. This candle here takes out this day's high, also this day's high, and in the same day takes out both their lows. If it takes more than 3 or 4 days, I am not really, I just looked at, there's a comment here. Snap, you go. I'm so sorry. Snap. My bad. I forgot you couldn't see my chart. Sorry about that. Thanks, SD. Okay, so basically what I did was, drew a weekly chart, put up a weekly chart, and just drew levels. So these black lines are levels for my weekly chart. So highs, lows, opens, closes. I took a range and said price is here. That's the next swing low. That's the next swing high. Very unlikely that price breaks this range. Certainly unlikely it breaks it to the downside in 1 week. Not impossible, just unlikely. So in that range between here and here, I drew a rectangle between here and here. In that range, all the weekly highs, opens, lows, and closes in that range. Just put them on your chart. And don't duplicate the ones that are close. If they're close to each other, just take one of them and assume it represents the others. Then we drop down to a daily chart, and I said on a daily chart, another layer that I haven't given you up until now that I'm now dropping today is, if you're a swing trader, right, what I showed you on a 4-hour chart works on a daily chart with a slight tweak. You want to see the high of a day and the low of that same day taken out over no more than 48 hours. Meaning over 2 days, one particular daily candle should have had either its low first and then its high taken, or its high then its low. And I gave the example here. This candle here, right? This black candle here. The next day, nothing happened. But 2 days later, 48 hours, we saw price take out its high and its low. Look, and we know, so it took out its high and its low. Now, actually, this might, let's see, what order did this happen in? Let me put this a line there. I need to know, because the order it happens is important. You want it to happen in a, so if you're going down, it should take the high out first and then the low. And I don't think that happened here, so that's probably not a good candle to use. This one is, though. This one is very, very good. Because we know that price closed there on this day. On the next day, it went up and took out this candle's high. Look at that. Took it out And then in one day, not even two, in one day, took out its low. This is a directional shift. When you hear me say things on the group like, I'm not taking this trade because it's counter-directional, this is what I mean by counter-directional. And it's a great filter. Absolutely great filter. So, after this day here, we are hunting shorts. So for the last 1, 2, 3, 4, 5 days, and yes, there were little days were indecision days, but pretty much this was a Friday, so I don't trade Fridays usually. This was a Wednesday, indecision day, but look at this. Since this point and today, now as we speak, the market is printing money in that direction. So this is how I find in essence, from this day onwards, I'm only looking for 4-hour signals going down. How do I change my directional bias when I see the opposite happen? When I see a candle, a daily candle, one day, that has first its low taken and then its high taken within 48 hours, then I know my directional bias has shifted and I'm now looking for longs. So at the moment, I'm exclusively shorting gold, right? Now, this does not mean you cannot have profitable trades the other way, especially if you're a scalper or a day trader. This is how I trade. 4-hour for me is my signal. So weekly is my levels, daily is my bias. You can drop it down. If you're a scalper, if you're taking your executions on a 5 or 1 minute chart, let's say 5-minute chart, then your signal time frame will be the 1 hour. That means your directional bias time frame is the 4-hour. And there will be times while we are in a downward momentum on the daily where we are in the upward momentum on a 4-hour. So it's not, well, this is what Israel does. No. Apply the principle of what Israel does to how you trade. That's why I'm taking the time to break it down. So now in the 4-hour chart, let's go back to daily to figure out the day the direction changed. So from this day here, from this day here, we're exclusively short. See, the market's going faster than we can get in. Well, that's fine. I think Esty already gave this signal, if I'm not mistaken. Esty, did you give this signal already? So basically, from here on, we're short. If we're short from here, what are we looking for? We're looking for the 4-hour stop hunt and reversal. And we got it on the same day, right? This is the day here. We got it the very same day. This was a 4-hour swing high. Let's put that in purple. It's a 4-hour chart or signal chart. This was a 4-hour swing high. There. Price took it out and then cleared it there. So, we'll take this away now. You could literally have been in this trade since, what day would that have been? Since Monday, since yesterday, right? You could literally have just put your entry there, put your stop loss above that 4-hour high, and then first possible target would have been this low here, 2.38 to 1. Second target, this low there, this one here, right? 4 to 1. Third target, that low there, 5 to 1. Fourth target, this low here, which is the next one, 7 to 1. Final target for the runner, this low there, 8.7 to 1. It's just, I mean, look at it. It's just simple. And if you're really, really conservative, okay, now, I mean, if you're a swing trader, put your stop loss there. Yeah, we took that on Telegram, SD, didn't we? Yep. And we did over 500 pips. Yep. If you're a swing trader, that's fine. Put your stop loss there. And then, of course, if your stop loss is so high up as a swing trader, you kind of want your take. So, for instance, there's still, you can target there. You can still go. Remember when we did this, we put this line there. Now, what are these lines? Can you see these magic lines now? Let's talk about these lines, right? These are the lines I drew on a weekly chart. I want you to see what price does at several of them. Look at that. This was drawn. No, this was the beginning of the week. That's fine. So look at that. See what happens there? Right? Look what happens here. And there again. When we get here, watch what happens. When we get here, watch what happens. In essence, you will notice that these lines you draw on the higher time frame, if you draw them correctly, are bus stops, meaning they're places where you can either exit a trade or look for a continuation or reversal pattern. They're like telling you we're going from Sheffield to London, and the stops are Derby, Nottingham, Leicester, Northampton, Milton Keynes, and London. But there you have it. So we're still shorting gold. And we'll be shorting gold till we see the reverse happen, till we see a 4-hour low swept and a 4-hour reversal. If you are an intra-week trader. If you're a scalper, a little bit different. Maybe one of these days I'll do a live analysis from the perspective of a scalper. So you see the same principles work on a 5-minute execution chart. Now, remember I said this was the simple way to have done it. Just put your stop loss there and go for the ride, right? Okay. And up for now, you would have been up if you were to close at this low here. Your trade would have been 6.8 to 1. Now let's go to the 50, because we would have taken this trade, and I think SD actually gave you this trade, if I'm not mistaken, on a 15-minute time frame. Now let's look at this on a 15-minute time frame. What would your entry have been? So let's get rid of that. Well, on a 50-minute time frame, that's the level of the stop hunt, right? That's the level of the stop hunt. Price goes up there and reverses. And then it breaks structure on a 50-minute chart. 1 second. I want to blow this up so you can see it very clearly. So this is the 4-hour break, right? And the reversal. There is a low there. You're looking for the first clear 50-minute change of structure. There's a low there. Forms a low, goes back up. And look at that. See, I don't want to add this yet, so I'm going to stay away from it. But this is one of the layers of confirmation I'm talking about. But that is a very clear, I'm not going to show you what the layer is, but that's just a very clear 15-minute reversal there, right? And break structure again. So it breaks that structure clearly, goes back up and breaks it again. So on a 15-minute chart, this, as a day trader, would be a very, not you, a very safe entry. You'd get in there at the close of this candle, or even the break of this one, just a tick below the break of that one. You put your stop loss there, you can put it there, you can go back and put it at the 4-hour high. This is the beauty of lower time frame entries. Now, if you put it all the way back there, right, and you had stayed in this trade from there, said, Jimmy, been in this trade since Monday. Actually, yesterday, not even Monday, yesterday, right? Let's go back to a 4-hour chart so we can see this clearly. That's the trade. As of right now, you would be 12 to 1 up. As of time T dot right now. And if you said, well, I'm going to get out at this. So if you were out once we cleared this low, which is something I would personally have done, SD has a lot more cojones than I do. I like to be in and out. I take my 4 to 1. Trust me, you don't go broke taking 4 to 1. But even if you got out here, that's 10. Ladies and gentlemen, boys and girls, can I interest you in a 24-hour trade that pays you 10 to 1? Where you risk 1% of your account. This is how you pass a prop firm challenge. With good risk management, good money management, simple, repeatable, consistent market application. But if you're in, and me personally, I think we're good to get to at least here. That's 13 to 1. And really, if we looked at the entire weekly target, we said we will be looking at somewhere in this region here. That's almost 20 to 1, man. 1 week, 1 trade, 1 asset class, you're done. Okay? But this trade started yesterday. It is live. Now, if you missed yesterday's entry and you were able to trade during Asia, how could you have entered? Well, this is how you could have entered. So we have here. Okay, no, so that's done. That didn't sweep. That's fine. So basically, you missed the entry. Well, go back to the 50-minute chart and look for one of these magic lines where you see a 15-minute change of character in the direction you want. So this was the entry here. If you missed this, well, do you sulk and say the week's gone? No, you don't. Wait for price. Notice between this line and this line, did price do anything significant to tell you to get back in? No, it did not. Now, if you had gotten in here, the only safe place to have placed your stop loss would have been there. You're chasing price. Your risk is larger. Your reward will be smaller. Just wait till the next bust up. We drew this from a weekly chart, remember? At the next bust stop, here we are. What does price do here? It gives us the entry signal. How? It takes out this high right there. Look at it. Takes out this high and then breaks. This should be blue. It's an intraday level. And break structure to the downside. Changes character to the downside. Right? So, you see, that high swept, that low swept, price comes back, engulfing pattern, you're in. You're in there. Now you can put your stop loss there. Right? Because this weekly level tells you this is a market making bust up. Put your stop loss there. And then you can then participate in the rest of the move with the exact same target projections as the first move. So if you got in late at that level and you stayed till now, you would still be 11 to 1 up. Can you see that? What if you missed that one? Well, the same principle. All right, guys, sorry about that. Some technical issues here, but let's get back very quickly. All right. So, I said if you missed that one, you just wait for the next one. Right? So, back to start. So, where's the next one going to be? Here? No. 1 second. Let's get back on the far chart and see this. All right, so where were we? So I say if you missed that one, so let's put this line in the sand here. So this is the one you would have missed. No, vertical. So you'd have missed this one here. So we're going to go from there and look for how many opportunities we had to get back aboard this particular trade. Okay, so that's the line. All right, so we missed. Just wait for it to go back, go to another bus stop. So notice what happened here. There was a reversal here. And where did it exactly at one of these magic weekly lines, right? And then price went back up and then repeated the process again. Now, this is where I like to use the 1 hour chart in the intermediate chart between your signal chart and your entry chart, because this looking for a re-entry opportunity is a lot more consistent on that chart in between signal and execution. You'll see a lot of, for instance, here, you'll see a lot of false dawns on the 50-minute. Now, this was one here. Price took out that high. Actually, it wasn't a false dawn. It still would have paid you here. But you can't now participate in the full move all the way down. You're not sure. But it's an example of one. High, sweep, con. But let's look at this now on a 1 hour chart. Because there's less noise, especially when you're looking at a re-entry. Fine. So can we see the same entry pattern on a 1 hour chart? Yes, we can. Where is it? Here. Right? Price takes out a low, a high, reverses, and dumps. It's safer. I'm not saying you have to do it. You could go 15 minutes. You'll get some false dawns. This is safer. And then again, if you were in here with your stop loss there, and you were still in the move right now, actually, this would actually have given you a better risk to reward ratio than being in from the very beginning. That's how we do it, ladies and gentlemen. Okay, SD, is it worth doing oil? I think the video's gone on long enough. What do you think? We can do oil in the group, right? We can post oil analysis in the group. What do you think, man? And is there anything else, SD, is there anything you want to point out to me before we start to run down, close out this analysis session? And by the way, guys, any questions in the comment section? I know some of you probably left when the technical difficulties hit, but if you're still there and you have any questions, let's know. All right. I guess the answer is no. So, ladies and gentlemen, that's how you do it. It's really that simple when you know what you're looking for. Our job here at Pluro is to show you what to look for, how to look for it, and to be positioned to get it like a sniper. You go into the market with clear expectations of what you want to see. When your hypothesis is confirmed, you step in with boldness and you execute. I hope you've had a great session. I hope you've learned a lot. If you want to be part of our free Telegram community, the details are on your screen at the bottom. Please like the video, subscribe if you haven't, share it. Also look for Plural Markets, where you can also subscribe to our other YouTube channel. This is going to be pure teaching like this and analysis sessions. That's going to be a lot of other content around becoming the best trader you can be. And for those asking, our next paid mentorship cohort will begin in May. So all the information will be posted on Telegram. Make sure you join the community. Take care, bless you, and bye-bye.